Hey family, thank you for hopping on Wealth Builders. Look, we need to talk about this money. We need to talk about our plan for 2026 and how we plan to really protect and grow our money. So if you guys need some help with this and you need better understanding, watch to the end and I got you guys. All right, I'll see you over there. All right, so 2025, I felt like was a really good year. However, the economy was a little crazy and a lot of people did take some major losses financially in their retirement accounts, which were because of the tariffs. Once that hit, people started losing thousands and thousands of dollars in their retirement accounts. And I don't want that to happen to you guys going forward, meaning a lot of people like playing in the market. And I say play because it is a game. It's a long game on top of that. You're going to take some losses and you can't touch the money so that it'll grow and come back on top of that. It's a whole thing with the stock. I'm not licensed to do that. What I am licensed in is life insurance and annuity. And if you guys diversified your portfolio, your money, your wealth portfolio, then life insurance should definitely be a part of that. And for two reasons. One, because you need life insurance anyway. There's several videos on my channel that you guys can go and watch that will give you reasons as to why life insurance would be beneficial to you, whether you had children or not, whether you're wealthy already or not, you still should have life insurance. It's literally essentially buying money and you're more than likely not going to pay as much into the policy as it will pay out to you and your family on the back end. It just makes sense, and those are tax advantage spaces and you can get huge amounts of money in one go, right? As well as the living benefits that can help you along the way while you're alive, borrowing from yourself, all of those things. We talked about it in the past, but we're going to talk about it some more in the future. But this video is geared toward your retirement and how you want to move forward with that. So I did some research. Do you know that SSI, in order for you to get the max payout of SSI, meaning that's Social Security benefits, you would need to be making a salary consistently of at least $173,000 a year for some years, not just like one or 2 years. It would have to be a lot of consistent years, and I'm thinking at least 5 for you to then qualify to get max payout for your Social Security on the back end. Second thing, in order for you to get this max payout, which is about $5,000 a month, you also would need to hold off on getting those withdrawals until you're 70. Now, I tell you guys this all the time. They literally are wanting us to work until we're 70 at this point. And I'm going to be honest with you guys. I don't know what kind of jobs you guys are doing, but do you really see yourself working that job or any type of job that will give you that level of income until you're 70? Okay? Because honestly, the jobs that I have had in my life were not super strenuous jobs, but capacity wise, with just sitting at a computer for hours and hours and having to be present for 8-9 hours of your day, whether you're in supervision. If you're a manager or something like that, then you got to literally help your teams, out for hours and hours of the day. If you're doing physical labor of standing up, you already know joints, planters feet, all type of things come with that type of labor. It's crazy how much it really takes out of you for you to only get a couple days off as far as break. And some people don't even get that because a lot of you guys are working multiple jobs, right? And so when you take that into consideration, it's very hard to make it to 50 almost working, much less trying to make it to 70 or 70 plus in order for you to really get that payout of Social Security. And the reason why I'm focused a lot on Social Security is because some people don't have pensions, right? So the only payout that you're looking forward to getting at retirement is what you're paying into Social Security, right? Now, even if you were to get a pension, that's still a real thing of you still have to work that job a certain amount of time to qualify for that pension. So then we get into the 401ks, right? Those 401ks, a lot of people's 401ks took a hit. Some didn't, I will say. But if you don't really know how to monitor where your money is at within your 401k, if you don't know how to check on your 401k through your employer, a lot of you guys don't know what happened in your 401k this past year. But I will tell you guys that when tariffs hit, a lot of 401ks took major losses. And I'm talking about, I know somebody who took a loss of $100,000. If you had tapped into Facebook, there were people that were taking losses of $30,000, $50,000. These are huge numbers. And a loss is a loss. Yes, you can get that money back, but it still was gone. Like you had money that disappeared that you now got to work to get back. Then you got to figure out how to make that money grow on top of of that so that you can have enough money to make it to retirement and through retirement, right? And that is just so you can have enough money on the side of your SSI that we are praying that the government still has for us when we get to retirement age. I bring up hoping that the government has that money to give us at retirement age because oftentimes they keep saying that our Social Security benefits could get depleted. I think that, well, it's not a thing. The baby boomers are living really long. And so even when it comes to the money that we're putting into our pensions, right, that is to help pay for people who are currently retired. So the people behind us are who's technically paying into our retirement, right? And we're glad that the baby boomers are living long. They deserve that life. They've been through a lot, and we're just happy that the Lord is blessing them. However, you still have to be mindful of your money outside of what's being taken out of your check that you're hoping will be there when it's time for you to retire, which would come in the ways of, like I said, your pension and your Social Security. So if I'm telling you guys that in order to get max Social Security, you need to work a certain amount of years at about $173,000, right, for you to get that max payout of about $5,000, you need to look at how much inflation has hit at this point of your life. Meaning regular things, I'm going to just use eggs because we all knew how much, we knew eggs went up and we couldn't figure out what was going on. If those items can do that any point in time and you feel like you bring home $5,000 a month now and you feel like that money's tight, imagine it when you're in your 70s and you genuinely have a hard time going and generating more money. Right now, you're young, you're youthful, you can still go and get a part-time job or whatever the case is. At 70 is when you're supposed to be relaxing and enjoying the fruits of your lifelong labor that you have paid into and poured into our job market and to this society, right? You do not want to get to that age and just like, I don't have enough money. $5,000 in Social Security may or may not be enough money. It's according to how well the economy is doing at that point in time as well. And so just take that part into consideration that I make $5,000 now and it's a struggle. I will still have bills in retirement, meaning your house may be paid for, but you will still have all the bills within that home to pay for your insurances, your homeowner's insurance, your light bill, your water bill, car insurance, insurances that don't go away. I will tell you the insurance that you should have that could potentially not be paid for the remainder of your life is life insurance, because those policies can be structured where you don't have to pay for those policies forever. But the rest of your insurances, you're going to be paying for them forever. So you will definitely still have bills in retirement. And I need for you guys to understand that. I need you to start thinking about that so that we can figure out what works best for you to live a good life now, but also live a good life then, because that is a strong part of what we want to do here is make sure that we can live a good life for the rest of our lives, right? We want to skip the line. We want to know where to house our money so that it can grow and be protected, as well as you guys can also learn how to put your money in the stock and things like that. And as a family, we can help each other in the comments with a lot of these spaces. But I can speak to you guys on life insurance and annuity. And the reason I feel so confident and comfortable speaking to you guys about this is because it does not play in the market. It runs alongside of the market. It has some indexes that grow like the market, but it is not in the market. So if the market were to take a loss, your money will not take a loss. And that's in the Index Universal Life Insurance policy that has a life insurance portion, but also a cash account that houses your money and grow it at a compounded rate. And it is not in the market. And that also is in a fixed index annuity. Now, that is not a life insurance policy, but it is backed by life insurance companies. And I tell you guys all the time, life insurance companies cannot write a policy. They cannot offer an annuity without knowing that they have that money on hand to pay you out immediately, because an annuity also has a beneficiary attached. And those are just federal guidelines for life insurance companies that they have to follow. And so if I'm telling you this and I'm telling you you're not going to take loss in the market, but your money will still grow like market-like growth, right? Compounded interest. It's a win that is helping you diversify your wealth. Right? And I want you to know that these policies, these things exist because you don't have to keep your money in one space. And I'm not saying life insurance is your end all be all. What I am saying is it is a tool in your shed that will help you get down the road to have more wealth and money along the way, and not just putting your money in a bank where they're housing it, but they're not growing it. Now, one reason why I focus on the Index Universal Life Insurance policy a lot in this space is because it has multiple services, right? You have the life insurance portion, you have the cash account that compounds your interest, and then it has the living benefit that can potentially help pay out bills and stuff like that in the area of certain ailments that you may get in your life. So I believe that everyone that can afford these policies should have one. They definitely have to be properly structured, which is what me and my partners and I specialize in doing, but they also have to be properly funded for you to see max benefit in these policies, right? So I always encourage to get these policies on your children because they're younger, and when you make the payment into the life insurance portion, it's a smaller payment because life insurance is cheaper for your child because they're so young, right? And they don't really have a lot of health issues and stuff like that. So I encourage you to get the life insurance on them, the IUL in particular, while they are 14 days old, as young as 14 days old. Right? Because it will grow with them. The cash will grow with them. It'll be the most affordable life insurance they will have. So at some point, they could potentially take over payment of that policy and it not be such a financial burden on them. As well as this is one of the best ways to create generational wealth for them, because at some point that beneficiary will change from you to one of their children, more than likely, or a niece or a nephew or whomever they want to leave the money to once they take ownership over their life insurance policies. Mind you, you can have multiple policies as well. And these are tax advantage accounts as well. If they're properly structured, when you go to borrow against them or be your own bank, those are tax advantage accounts. And so the link will be down below for you guys to get an appointment, to get a quote, to see what an index universal life insurance policy will look like for you, as well as there'll be a scanner bar over here as well that you can scan and hop on a call. And it is a free quote. We are definitely giving you guys free quotes because this is how serious we are about the fact that you should inquire about this to see how you can grow your money. All right. So going into 2026, we want to be prepared and already have this in place so that we know it's a part of our budget and we know that we're going to pay this regardless, because it's giving us the life insurance as well as it's also being used as a savings tool. And mind you, I told you, you don't have to pay these policies forever. So when you decide, hey, I want to stop working at 65 or whatever, those payments will stop, and then you can start getting distribution if you don't care so much about the life insurance portion and you're just ready to use your cash. And we will definitely get into how the index universal life insurance policy can be used in multiple ways on another video. So please, if you're finding value here, make sure you subscribe and ring the notification bell so that you can see when videos pop up as well. And once again, I told you this is about retirement. So that's why I referenced that you can stop payment at a certain age and then start getting distribution, because that can fill in the space of your retirement, right? Or that can be the money that you wanted to use to travel or whatever. It might not be so much that you need that for life insurance at that point. It might be what you are using to substitute your retirement, because I'm telling you guys, you have to make the income along the way to get that big payout. What I'm gonna call it big, that's the max they can give you right now for your SSI. However, you can substitute that. You can have some other income coming in from other streams so that it won't feel so low, and you can still maintain your lifestyle and have a good retirement system going, as well as still live the life that you want to live. With the fixed index annuity, you can start these with as low as $100 a month, right? And that's just to get it going. But if you really want to use this as a retirement tool, you definitely should put more money in it over time, right? When your money starts to grow, you start pouring more into that fixed index annuity. Like I said, it is not a life insurance product, but it's backed by a life insurance company. So what happens is your money, once again, plays in indexes along the side of the stock, but not in the stock market. So for instance, if the stock market or the economy goes bad, you may not get any interest added that year. However, the interest and the accruals of income that you have had at that point will not be lost in the market. And that is what helps solidifies your retirement, because you need to have some money in some safe spaces that won't take a loss in the event that our economy decides to go crazy. And it's very rare to see a life insurance company close. So this is one of the most, in my opinion, this is one of the safest spaces to house your retirement plans. It's going to grow your money at compounded rates. It's going to house it. It's going to keep it safe and protected. What else do you want? You should definitely have one of these, and you can start it as little as $100 a month. And here's another way that you can start one of these policies. You can roll over an old 401k. If you're currently separated from an employer, they might have laid you off, you might have quit or moved on, and you just didn't know what to do with your 401k that you had there, you can take that 401k and move it under a fixed fixed indexed annuity. And it's fixed because we are making sure that you have money there, right? We want to make sure that you're going to get certain level of interest on your money once you put it in those accounts. Now, that would be a retirement account. So this is a situation where you would want to let your money sit there for at least 7 to potentially 10 years without taking distributions. And this is because this money is specifically, we're using this money for retirement. We're trying to make sure that when we're ready to stop working, we don't have to go back working. This money is going to pay you lifetime income as long as you're alive, right? You're getting paid these distributions. But it does have a beneficiary attached. So if something were to happen, your beneficiary can have access to that money. Also, you can have riders onto these policies because we never know what's going to happen to us, right? And you might want long-term care assistance. They have riders that you can add to those fixed index annuities that can help pay for you if you have to go to assisted living or have a nurse or something come into the home. So these policies and these products have dual servicing, and this is why I love them so much. And this is why I want you guys to know that they exist, and I want you guys to see what that would look like for you. And if you, once again, need to get more information about, hey, I need to move this money, I need to roll over my old 401k, I want to protect my money, I want it to grow, then you definitely should scan the code or either click the link down below. That'll be there for you as well for a free quote or a free overlook of your retirement plans and how this could potentially help you get down the road, right? So I want to help you guys, and I want you guys to help yourselves going into 2026. We're not going to keep our money all in one place, and we're not going to keep subjecting our money to market loss, or we're not going to keep subjecting our money to banks that only FDIC secured up to $250,000. We're wealthy, right? We have more money than that. We're going to have more money than that. So we have to start thinking about safe spaces or either just other options to diversify our portfolio when it comes to our income, our money, our wealth, right? And also, we want to just live a good life in retirement. And there are multiple ways to do this. And I just want you to know that life insurance and its products is a strong way to do this, and why. So when we look back over what we've talked about so far, we have the Index Universal Life Insurance Policy that will give you life insurance, living benefits, as well as it will compound your money that you can then get distribution on the back end of life like a retirement plan, right? Or either you can get one on your child and you can borrow from that along the way, be your own bank. You can help them get their first car. You can help them pay for their college through these policies, and also you can have multiple. You don't have to just have one life insurance policy. You can have multiple that you're max funding and that are properly structured through my company, which is Champions Financial LLC. Me and my team will help you guys structure these policies properly. Next, we talked about the fixed indexed annuity, which is a retirement account. It does have the 59.5 rule still. However, it protects your money against the market loss. You may not get any interest if the economy is doing bad, but you won't lose anything in the midst of that. We can roll over our old 401k into these policies, or you can start one with as little as $100 a month. And it will then pay you out in distributions on the back end of retirement like a pension. And it also has a beneficiary in the event that something were to happen to you that could collect on your retirement account. And these are lifetime payout accounts. It's really a beautiful thing that it even exists. The wealthy has known about this for a very long time. And annuities have been around since Caesar. Honestly, it's been around for a very long time. And so I don't want you guys to not have the opportunity. So once again, the scanner code will be present here. You will get a free quote. And we would also do a second look at any policies that you already have so that we can help you. Once again, I'm Tamika. I'm the life insurance game changer, and my business is Building Champions Financial LLC, and we service the United States and its territories. So if you're also looking for that extra income, because once again, the economy, some people are laid off, we definitely can help you get licensed so you can start a business too, because those tax deductions from having a business are a beautiful thing to have at the end of the day. And I want to help you guys with that space, and you get mentorship under that umbrella. We teach you all about policy writing and structures, and that's one of the best ways to really understand how these policies work and make your money work for you. So we definitely would like to be teammates. We want to get to know you, and we want to work alongside of you as well. And also you can get all that information when you get your free look or your free quote at the scanner bar here. So listen, family, I hope you took something away from here today. And if you did, make sure you subscribe, ring the notification bell. But remember, Even if you feel like this isn't for you or isn't about you, or things here you feel like you already have under control, it's nothing wrong with getting a second look just to make sure. But also just share this, because it could be a friend, a family member, a coworker that was trying to get an understanding of how they can make their situation better financially, and they may be looking for a safe space to house their money. And we want to help them, and we want them to be a part of our family. So make sure you share this, okay? Family, I'll see you on the next video. Oh yeah. Make sure you watch my next video. All right. Bye.